Pleasant day to everyone. I am Mark J. Bragais and I am an account officer of the Development Bank of the Philippines. I will be your focal person for the DBP's ERCA RCEF loan program. In behalf of DBP, I would like first to thank the Department of Agriculture and the Camarines Sur Chamber of Commerce and Industry for inviting us here in the fourth Bicol Agri Summit. So, to give you a background on the RCEF loan facility, this loan type was formulated because of RA 11203 or the Rice Tarification Law. 1 billion pesos was earmarked by the national government, and it will be divided by DBP and Land Bank equally, and this fund will be used to finance a loan program specifically for individual rice farmers and cooperatives. So to begin with, what are the program objectives of the ERCA RCEF loan, or the Expanded Rice Credit Assistance uh, under the Rice Competitiveness Enhancement Fund? So first, um, this loan program was formulated to ensure that the bank is compliant with RA 11203 and to provide a simplified lending program with preferential terms and favorable to rice farmers and their cooperatives. Number two, to boost the productivity of rice farms that will be significantly affected by RA 11203. And lastly, to clearly outline the scope of DBP's responsibility in relation to the implementation of ERCA RCEF, as this facility requires collaboration with various government agencies. So, who will be the eligible borrowers for the ERCA RCEF loan? So, number one will be the individual rice farmers, which are listed in the registry system for basic sectors in agriculture, or also known as RSBSA. Number two, DA accredited cooperative with rice farmers as members. So the next one, what will be the eligibility criteria for individual rice farmers in order for them to avail of the loan with RCEF? So number one, the individual rice farmer should be registered with RSBSA. Number two, the farmer should have no outstanding loan from lending institutions and DA-ACPC credit conduits for the same projects being applied for. Number three, the individual rice farmer should have no adverse findings during the time that he applied for the loan. And lastly, he has undergone technical training on rice-related projects. Let's go to the eligibility criteria for cooperatives. So number one, the cooperative should be duly registered with the CDA, as evidenced, of course, by their certificate of registration and articles of cooperation and bylaws. They should also be accredited with DA. During the time of their loan application with DBP, they should have no adverse findings, and its principal, meaning the board of directors and the key officers, should also have no adverse findings. They should also have strong back office support with defined operational structures. The next one will be they must exhibit profitable operations and sound financial conditions. So we will be requiring them to submit the latest financial statements or the previous year's financial statements in order to assess whether they are eligible for the said loan. For startup businesses or startup cooperatives, they must be able to demonstrate profitable operations based on the financial projections of the proposed project to be financed. So, if the cooperative is startup, DBP will require them to submit a projected financial statements, and from that, the loan officer or the bank will assess whether the startup cooperative will be able to pay the loan when the maturity comes. For if ever a cooperative or would like to apply for a loan and the cooperative is engaged in relending to its member farmers, um, the past due loan ratio should not exceed 25%. Meaning, um, if for example the cooperative has a total 1 million pesos worth of loans to its member farmers, the past due amount should not exceed 250,000. The next one, the cooperative to be eligible should have a certificate of compliance from CDA if applicable, and has met the capital requirement of CDA or not less than 30,000 pesos. Then, the cooperative should have a proven track record or familiarity on the proposed project and has undergone technical training on rice-related projects. So if we have the cooperatives, we will also assess the eligibility criteria for its members. So what will be the eligibility criteria if ever a cooperative was approved of a loan, and they will distribute it through a lending facility also to their members? What will be their basis in granting a loan for their farmer members? First, the rice farmer member should also be registered with RSBSA. Secondly, the account has no history of default with the cooperative for 3 consecutive months, meaning the rice farmer or the rice farmer member of the cooperative should have an updated payment uh, with his loan with the cooperative during the time that the member have applied with the loan to the cooperative. Number three, the account for rediscounting is not yet fully paid. That means if the eligible purpose that the cooperative have applied for the RCEF program is relending or rediscounting to of loans from its member farmers, the loans of the member farmers should not be fully paid, because if that is already fully paid, there is nothing to be financed. And lastly, uh, the member farmer that would like to avail of the relending or rediscounting program of the cooperative should have undergone technical training on rice related projects. So we can see that this technical training is always being required both for the individual uh, farmer, the cooperative, and the members of the cooperative that would like to avail of the loan. For the eligible purposes, we have two eligible purposes for individual farmers that would like to avail of the RCEF program. Number one is purchase of farm input, so that includes the seeds, the fertilizer, and the labor during the planting season or the planting process. Number two, acquisition of farm equipment for production or post-production, including mechanical dryer. So how much will be the loanable amount? The loanable amount is 90% of the total project cost. So for example, the cost of the machine is 1 million pesos. The loanable amount is 900,000. The 100,000 will be shelled out by the individual rice farmer, and the remaining 900,000 will be financed through the loan. For cooperatives, we have plenty of eligible purposes that the cooperative can apply. Number one, we also have the purchase of farm inputs. Number two, for working capital requirement, meaning if the cooperative would like their operating expenses be financed through a loan, that would fall under the working capital. Number three, acquisition of machineries and equipment, including mechanical dryer. Same if the applicant is an individual farmer. Number four, establishment of facilities for production and post-production processing and trading. Number five, relending to small rice farmers listed in RSBSA for palay production. And number six, rediscounting of existing loans of small rice farmers listed in RSBSA for palay production. So again, let me just reiterate to you what will be the project cost sharing if ever a cooperative or an individual rice farmer would like to apply for a loan. Again, 90% of the total project cost will be financed through loan, and 10% will be the borrower's equity. The expenses or the cost of that 10% of the total project cost will be shouldered by the borrower. How much will be the interest rate if ever a cooperative or an individual rice farmers will avail of the loan? For direct lending, interest rate shall be 2% per annum, while for relending and rediscounting, 0% per annum, and the cooperative may implement or impose a 6% interest if ever they will be relending it to their member farmers. But the maximum interest rate that they can implement is only 6%. Of course, that is to help the individual farmer member to cope up and to boost the production of his rice farming. For the bank may also grant the borrower, whether individual rice farmer or cooperative, for a grace period. So what is a grace period? This is a period of time in which the borrower will only pay for interest. The principal loan or the principal payment will be collected on a later date na. What will be the maturity of a loan if ever an individual rice farmer or a cooperative is approved of the RCEF loan? So it will actually depend on the type of the project to be financed. For example, if an individual rice farmer applied for production loan to purchase farm inputs, the maturity is 2 years, but it will be covered by a 180 days promissory note. Rollover may be allowed. So meaning, if a rice farmer is granted of this type of credit line or line, once he availed of this loan, the DBP will release the loan, and after the planting season or after the 6 months planting season, after the farmer had sold all his produce, he will pay back the bank. For acquisition of equipment, it will actually depend on the cash flow of the project to be financed, but not to exceed 7 years. So the maximum tenor or the maximum time that the account will be outstanding is 7 years. For establishment of facilities, again, it will depend on the project cash flows, but not to exceed 10 years. For relending or rediscounting, it will be based on the maturity of the loans of the members. For loan security, the bank may require the borrower to submit collaterals depending on the type of uh, facility or project, again, to be financed. For production loans, the bank will require for PCIC insurance. For purchase of machines and equipments, the bank may require for insurance of the equipment and the registration of the the machine with the registry of deeds as chattel. For construction or establishment of facilities, a combination of chattel mortgage, real estate mortgage, and insurance may be implemented. For relending or rediscounting, of course, the collateral will be the promissory notes of the loans of the individual borrowers naman. Let's go to the documentary requirements for individual rice farmers. If ever the farmer would like to avail or would like to apply of the RCEF program, the following will be or should be submitted. Number one, filled out loan application form which is available in our office. Number two, photocopy of one government valid ID. Or if the farmer does not have any government issued ID, the barangay certification is sufficient. Number three, sworn affidavit and or certification of no outstanding loans from any lending institutions or DAACPC for the same projects. We also have that type of form here in our office. So if you visit DBP, we will be giving that one to you. For loans exceeding 3 million or the borrower is operating for more than 3 years, DBP may require the following: uh, a copy of the latest income tax return. If the borrower has a co-maker, it will require him also to submit his income tax return. The income tax return should be duly stamped as received by BIR. And number two, copy of the borrower's latest financial statements as submitted to BIR for taxation purposes. For the cooperatives, the documentary requirements shall be the following. Number one, accomplished loan application form, certificate of accreditation with the Department of Agriculture, photocopy of certificate of registration from CDA, copies of articles of cooperation and bylaws, biodata of incumbent officers and board of directors with photocopy of one government issued ID. Number six, board resolution authorizing the cooperative to borrow and designating an unauthorized signatories. Number eight, business plan or consolidated farm plan budget if applicable. And number nine, current year business permit. So we have a pro forma of the business plan and the board resolution as well. If a cooperative would like to apply for RCEF loan, we will be providing them also with the pro forma documents. For the terms and condition, as to the mode of release, the loan will be released lump sum or staggered. It will actually depend again on the type of project to be financed. For the loan conditions, the borrower shall make DBP as its major depository bank. So whether you're an individual rice farmer or a cooperative applying for RCEF loan, you will be required to open an account with DBP. And for cooperatives, we highly encourage its members to open also an account with DBP. For the conduct of credit investigation and background investigation, it is required. The full-blown background checking and credit investigation is required for cooperatives. However, for individual rice farmers, for loans up to 1 million pesos, we only check the NFIS or the Negative File Information System, which we request from the head office. And for loan accounts or for loan applications above 1 million but not more than 3 million, we request for the Negative File Information System or NFIS and Loan Information System from the head office to check whether the individual rice farmer or the cooperatives applying for the RCEF loans does not have any adverse findings. For the other terms and conditions, the fees for the processing of the RCEF loan is waived except for the documentary stamp tax. For the cooperatives, the documentary stamp tax will be charged against the program fund, the RCEF fund. However, for individual borrowers, the documentary stamp tax shall be paid by the borrower before the release of the loan. If ever the account become past due to calamities like typhoons, restructuring or refinancing may be allowed for loans affected by calamity as declared by the concerned LGU or the national government. And lastly, if the account become past due, a 3% penalty shall be imposed against the borrower to start on the 61st day after the due date of the loan until the account is updated in terms of payment. So for more informations and for other concerns, you can visit us here at the DBP building, second floor, Panganiban Drive, Naga City. We will provide you with the necessary application forms and other requirements for you to apply for the loan. So thank you very much everyone for giving us the opportunity to share this to you, and we hope that with the RCEF loan program we will be able to help in the sustainability of rice production in our country. So again, pleasant day to everyone.